Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong upside move that started off of yesterday's initial support zone, and then the break above the 86.75 to 88.75 area confirmed the buyers in short-term control, and ES ended up eventually moving up to the 02 area, which marks the upper edge of the recent range. So the pre-market resistance 02 to 04 is a short-term inflection point, and it can be a hurdle for continuation, and we're seeing some responsive selling take place over there. But the overnight session has been quite bullish. Short term, the buyers are in control heading into the open. And now off the open, what we want to see is whether there is still enough upside momentum and still enough strength in the market to justify buying an aggressive pullback. So the pre-market support zone 95.75 to 97.75 is still technically an aggressive area to enter long. Now, it still makes sense as long as you're not seeing big downside momentum as the market pulls back into that zone, and the AD line is still holding some decent values. The other markets are still holding up. Then 95.75 to 97.75 is a good inflection point to enter long. But in order to take that long, you should be shooting for a breakout above 02 to 04. So in real time, you don't want to see any signs that are pointing to a failure at 02 to 04. As long as things are still holding up quite well, the pre-market support zone can be used as good location to enter long. Now, if we're coming down on some heavier downside momentum, then you might want to wait for 91.75 to 93.75, which is of course more conservative trade location, and it's a better zone. But the catch there is that when the market is very strong and the buyers are in firm control, a lot of times you don't get that deep pullback, right? So in today's case, that's really the challenge. The market's already moved from the bottom of the recent range all the way to the top of the recent range for the most part, and the upside could be limited to 07 to 09, and that makes it a bit difficult to buy at such an aggressive price up here at 2100. So you can use a short-term pattern to get on board if there is still enough momentum, but from a location perspective, this is still an aggressive price to buy up here, and it's safer to wait for a pullback because then at least you're more likely to get some short-term edge, and you'll get some time to kind of let that trade play out, as opposed to buying it near the upper edge of the balance and the range means that the market has to go your way pretty much instantly, and it's a momentum setup. It's not a location-based setup, it's a momentum setup. So if you're buying up here, then you need to make sure there's enough upside momentum to justify that trade. Otherwise, it's going to be better and safer to sit back, be a bit more patient, wait for the market to come to you. So the first spot, the first inflection point in the market is 95.75 to 97.75. It's still technically an aggressive zone, but if the momentum's still there and we're not seeing at least downside momentum, that zone can still make sense as a long. Below that, you have 91.75 to 93.75. Again, better location, a better inflection point. And the main thing, again, is you don't want to see real-time signs that are pointing to a failure at 02 to 04, right? There needs to be more upside potential in the market to justify buying pre-market support. Initial support, most likely, first test, you will get some level of reaction, even if eventually a sell side is going to take over. I think you'll still get some level of reaction, and it can actually mark the end of the pullback. Because when you're dealing with a stronger market, even on the smaller time frames, you don't want to see too big of a pullback, right? So ideally, if we are going to break out above 02 to 04, ES actually holds 95.75 to 97.75, right? Holding the aggressive zone confirms that strength in the market. But even if we come down to 91.75 to 93.75, that's still a good area to buy. And from there, we can still go technically back up to 02 to 04. Given how bullish the overnight market's been, if that theme is going to continue, then initial support can be a stopping point on a pullback, and a move back to 02 to 04 can take place, and possibly even up to 07 to 09. Below that, we have 86.75 to 88.75. Again, ideally, you don't want to see such a deep pullback. And then we're using 81.83 as the larger time frame bull bear zone. At this point, if the market breaks 81.83 on the larger time frames, that could shift control from the buyers to the sellers, and then that could open the door for some more significant selling in the market. But until then, the buy side can technically maintain control on the larger time frames. So again, the challenge heading into today is that the market's already made a big move, and when you've made such a big move in the overnight session, it is more challenging to find a spot to initiate a good trade with good risk reward. So continue being selective. It's okay if the market's already moved so much in the overnight. It doesn't mean that you have to trade it. Be selective. Don't budge on the quality of setup that you would normally look for just because it's moved so much. The fear of missing out causes traders to jump into a lot of mediocre setups. So don't get caught in that. And wait for the market to come to you. Wait for it to pull back into at least some level of support where you can get some short-term price edge that will allow you to let the trade work out. Because if you're buying it up extremely high prices, it's going to be tough holding that trade and sitting through some short-term balancing, which is very normal before a real breakout takes place. So make sure you're getting in at a price that allows you to play defense correctly. And I think if you're doing that, then even today can be a pretty decent day. Just requires a little bit more patience, and you have to be willing to miss a possible move. That's the only way to really be selective, is that you have to be mentally willing to miss it. Otherwise, you're going to jump into every little thing that pops up. So that kind of goes hand in hand. If you're going to be selective, that means that you are willing to miss a move that doesn't meet your criteria, or the quality of the setup that you look for. So keep those things in mind. The market's made a decent move overnight. Hopefully the buy side will continue to remain active and in control, and pre-market support, initial support, we can get some edge off of the zones and possibly look for a break above 0204, targeting 07 to 09, but 02 to 04 is a short-term inflection point and a possible hurdle in this market. So keep that in mind when setting your targets. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control into the regular trading hours, and we'll take it from there.